This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Tuesday, marking their third day of declines as an OPEC Plus plan to raise output outweighed optimism about a potential U.S.-China trade deal. Brent crude futures fell 83 cents or 1.26% to $64.79 a barrel at 0757 GMT. U.S. West Texas Intermediate crude futures were down 75 cents or 1.22% at $60.56. Traders weighed up progress in U.S.-China trade talks and the broader outlook for supply, ANZ said in a morning note.
A record wave of new liquefied natural gas production capacity coming online until 2030 is set to transform gas market dynamics by strengthening global supply security and easing market pressure, the International Energy Agency said on Monday. The IEA said in its Gas 2025 medium-term outlook report that 300 billion cubic meters per year of LNG export capacity is set to be added by 2030, primarily in the United States and Qatar. This translates into a potential net LNG supply increase of 250 BCM a year by 2030, the Paris-based agency added.
Moving on to the top news in the energy sector.
Indian refiners have not placed new orders for Russian oil purchases since sanctions were imposed, as they await clarity from the government and suppliers, sources told Reuters on Tuesday. Some refiners are tapping the spot markets to meet their crude oil needs, said the sources, who did not want to be named as they are not authorized to speak to media. State-run Indian Oil has issued a tender for purchase of oil while conglomerate Reliance Industries has boosted purchases from spot markets, according to sources.
Sanctions on oil exporting countries could push up crude prices, but the effect will be limited because of surplus capacity, the International Energy Agency Executive Director Fatih Birol said on Tuesday. Global oil prices jumped more than 7% last week, with Brent futures trading at $65 per barrel after U.S. President Donald Trump hit Russia's Rosneft and Lukoil with sanctions to pressure Russian President Vladimir Putin to end the Ukraine war. While sanctions could push prices upward, the effect is limited, with oil prices holding at around $60 due to a huge amount of surplus capacity, Birol told reporters on the sidelines of the Singapore International Energy Week. Next, we have the top news in metal markets. U.S. President Donald Trump and Japanese Prime Minister Sanae Takaichi signed a framework agreement on Tuesday for securing the supply of rare earths, as both countries aim to reduce China's dominance of some of the key electronic components. The leaders signed the documents, which included critical minerals, at the neo-Baroque-style Akasaka Palace in Tokyo, beneath 3 chandeliers decorated from top to bottom with gold ornamentation, as aides applauded. No direct mention was made publicly by the leaders about China, which processes over 90% of the world's rare earths, making it the source of each country's concern about its mineral supply chain. Beijing has recently expanded export curbs.
Iron ore futures prices strengthened on Tuesday, with market sentiment buoyed by China's recent proposal of rules placing limitations on steel-making capacity designed to rebalance supply and demand in the world's leading producer. The most traded January iron ore contract on China's Dalian Commodity Exchange traded 1.93% higher at 792 yuan and 50 fen, $111.26, a metric ton. The benchmark November iron ore on the Singapore Exchange was 0.43% higher at $106.15 a ton, as of 0706 GMT.
We will now look at the top news in the agricultural sector.
Winter crop sowing is progressing well across most of the European Union, although delays are reported in parts of southeastern Europe due to adverse weather, crop monitoring service Mars said on Monday. Rapid sowings in the EU, helped by drier weather than in the rain-hit starts to the past 2 campaigns, have raised the prospect of a steady planted area despite low market prices, analysts said. In initial indications about sowings for the 2026 harvest, Mars said favorable weather and field conditions had helped sowings in Western and Northern Europe with good emergence and early crop development. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.